Equity markets mostly up while dollar hesitates ahead of inflation data. At the start of the week, Asian equity markets were mostly lower, with the MSCI's broadest index of Asia-Pacific shares outside Japan losing 0.3%. Bucking the trend, however, China's Shanghai Composite jumped 2% on the first trading session after the Lunar New Year break. Adding to investor concerns were fears of the Russia-Ukraine war and U.S.-China trade tensions after U.S. officials said that patience was wearing thin in trade talks with China. Similarly, Wall Street markets closed on the defensive on Monday as investors digested dismal quarterly results from Facebook owner Meta Platforms. The company's stocks extended a decline after a 26% sell-off that caused a record plunge in its stock market value. The next day, Asian equity markets were mixed amid rising tensions between the U.S. and China after the U.S. Commerce Department announced restrictions on transactions with 33 Chinese organizations whose ownership was deemed to be unverified. Still, the Shanghai Composite Index managed to reverse early losses and finished 0.67% higher, while the Hang Seng in Hong Kong sank 1.02%. However, investor sentiment has improved eventually, pushing U.S. equities north on Tuesday, with the tech companies and banks leading the gains during the session. In individual stocks, Harley-Davidson rallied more than 15% after the giant reported a surprise profit for the fourth quarter. Adding to the positive tone, the U.S. House has passed a funding bill to avoid a government shutdown to keep the federal government open until March 11th. The bill now goes to the upper house for its vote. In Europe, stocks closed for a strong note on Wednesday, with an unexpected jump in Germany's exports aiding positive sentiment in the region. Exports rose by 0.9% month-on-month versus the expected fall of 0.2%. Meanwhile, growth in imports accelerated to 4.7% from 3.4% in the previous month. The pan-European stock 600 climbed more than 1.7%. Wall Street indexes extended the advance on Wednesday, with technology and communication stocks leading the way higher. U.S. stock market closed for its best day in the month to date. Facebook parent Meta has finally bounced more than 5% after plunging last week. As for the other stocks, shares of Chipotle gained over 10% amid strong quarterly numbers. The Nasdaq Composite jumped over 2.08%, the S&P 500 gained 1.5%, while the Dow Jones Industrial Average rose 0.86%. Asian equity markets were mixed to lower on Thursday as investors took a more cautious approach amid uncertainty around the outlook for inflation. The MSCI's broadest index of Asia-Pacific shares outside Japan eked a 0.10% gain. Japan's Nikkei 225 inched up 0.30%, while South Korea's Kospi inched up less than 0.1%. China's Shanghai Composite shed 0.16%. On the data front, Japan's PPI for January hit the highest level since 1985, while Australia's consumer inflation expectations increased for February. Meanwhile, Bank of Japan Governor Kuroda said that he sees a limited possibility for a major inflation surge. He also added that it's premature to debate stopping the easing policy during his remaining term as BOJ governor. Elsewhere, world bond yields continue to ease from multi-year highs, and the dollar keeps treading water ahead of the closely watched U.S. inflation report due later in the day. The data should offer new clues on the pace of U.S. interest rate hikes. The report is expected to show that prices rose 0.4% last month for a 7.2% gain from 1 year ago. The benchmark 10-year Treasury note traded near 1.945% after touching 1.97% earlier in the week. Lower yields coupled with mostly positive risk sentiment have put the greenback under some pressure while also staying within limited ranges for the currency pairs. The Euro-USD has been struggling to hold above the descending 100 DMA since the start of the week. The common currency is holding just above the 1.1400 figure that represents the immediate support ahead of U.S. inflation data. Should the figures reveal another jump in consumer prices, the pair may plunge toward the 20 DMA, currently sitting at 1.1330. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.